Yeah, morning guys, morning Venkat, Abraham, Rolando, Owen, Jimmy. Yeah, that's it. Yeah, looking ready for another action-packed session. We should have a busier session today with lots of data out this afternoon, so I look forward to taking us through what we've got coming up. I'll just make sure that's well on the way. There we go. So that's it. I've got all my boxes set up and I'm all good to go. Right, we'll start with a dominant currency sentiment pair, which we had today, which came with a caveat, essentially that we had key US data coming out later on in the session. So we had a downside bias on the Aussie US dollar currency pair. And that bias was due to the risk tone changing overnight. If you remember, yesterday, the risk tone was positive on the double dose of positive vaccine news. We had the Moderna positive vaccine news, and we also had the positive vaccine news from a group out of Oxford in the UK. And both of those groups were indicating positive trials with some kind of response from the first trials that they've been doing on humans. So that was some good news, boosted risk sentiment, but it was this data point overnight which hindered the risk sentiment. And it was the retail sales data out of China. Now, obviously, China is an important country in terms of global growth, particularly because China constitutes around 15% of global GDP. So, Chinese data is very important and is used as a good indicator of how the world is going to be faring. And obviously, retail sales is a good indication of how the consumer is feeling. Now, the retail sales data came in at minus 1.8%. So it wasn't below minimum expectations, but it was certainly below the Reuters poll of 0.3%. And despite the GDP data being better than expected, and despite the GDP quarter being better than expected, industrial output just a little bit better than expected, urban investment slightly lower, it was this retail sales data point that the market's focused on. And that's why we've seen the risk-off sentiment shift into the market. So hang on, I want to show you that in a minute, something different. So we saw Asian equity markets trading lower overnight. We have yields lower. We can see that European equity markets have been trading lower. They're off some of their worst levels for the session, but we had like crude lower, copper prices lower, iron ore prices lower. So we had a typical kind of risk off sentiment move. You see VIX is higher, so volatility was boosted. Now this weakened the commodity linked currencies. So the Aussie, New Zealand dollar, Canadian dollar were weaker, and it supported the safe havens like the US dollar, Japanese yen, Swiss francs. That's why we've seen some dollar strength, and that dollar strength continuing on into the session as we progress. So that's why we had our downside bias for the Aussie US dollar currency pair. Now, the difficulty with this as a potential trade was we've got key US data coming out, and we've constantly seen the market showing some kind of bias towards positivity. And we have risk off, risk on, risk off. So sentiment doesn't last very long. We've got this breakout on the daily chart of this ascending trend line. It's a triangle pattern. So you can see that this is a pattern that the market's trying to break up, back down, testing that ascending trend line now. So that's a critical point. So if anyone was short on the Aussie US dollar, that could be an excellent place to take profit at the S1 level and at that ascending trend line, so lock in profits or pull stops to break even. Just want to point out some technicals that we've been pointing out recently. Just want to show you that on this Aussie US dollar, we do have a head and shoulders pattern. If you look at the head and shoulders pattern, we have the left shoulder here, we have the head in the middle, and we have the right shoulder here. And the neckline is just sloping along here. So I'll just pop the neckline in place, and you can see here that on the shoulder, so the way that that's typically traded is traded by a break and a close below the neckline. and typically you'd be looking for an extension of the pattern. An extension would be from 07038 back down to sort of 66992. So that is about a 40 odd point target. For myself, I did short this out this morning. I shorted just from this underneath this retest of the 700 handle, and I just took profit at this S1 level because the market is so flip-floppy at the moment. It's changing risk on, risk off, and I just wanted to take that profit on that trend line ahead of the key US data that's coming out. But I want to share that with you because if we do get weak US data out later on this afternoon, and we still have a downward bias on the Aussie US dollar, don't forget that a retest of that trend line can be suitable for shorting. So that, that retest comes in at the 700 handle. So if we do get a negative picture out for the US later, and we see more safe haven bids into the US dollar, which is more Aussie US dollar downside, if that's settled, then just look at that return to that 700 handle as a good potential place for shorting. And then also obviously be aware of that big pattern on the daily chart as well. So that's just something for now and something for later. I hope that's clear. There, that's it. Yeah, so that was our bias in the morning. Now, one thing I wanted to share with you, obviously we're getting closer now to the key US data. We're also getting closer to ECB rate decisions. So the market's just sort of going into consolidation mode ahead of that. But what I want to show you is, the market's had this bias for upside recently. Well, if you just take a look at the actual breakdown of the data for China last night, it's not as bad as it first looks. So if you look here, let me get the right screen, that would help. If you just look here, you can see retail sales drop minus 1.8%. Now, when you break down the sectors, the majority of sectors showed an increase, an expansion for June. And it was only a few areas that showed contraction for June. So petroleum and related products, automobiles, catering, jewelry, furniture. Now, automobiles, they make up about 10% of the entire retail sales value. So obviously a drop in automobiles really drags down the whole sector. And they are falling from a very unusual high that came a year ago. So there is, that's not as bad as it seems. The petroleum and related products, I was reading a Bloomberg piece this morning, which was contributing some very poor adverse weather that there had been in South China that had maybe impacted some construction projects and infrastructure projects that otherwise would have been happening and expected to have impacted petroleum demand. So, look at the other sectors that were growing, cosmetics, beverage, tobacco, alcohol, daily use articles, grain, oil, home appliances, medicine, office goods, building materials. These have all been in expansion territory. So that's just to say that the data is not necessarily as bad. So that means that don't be surprised if the market starts looking through this retail sales data. Now, we have a couple of events coming up, so now's a good time to start looking at the events that are coming up. The first event I want to look at, it's just in light of the poor retail sales data from China. Now, there's retail sales data out for the US as well, so expect a little bit more focus on that today. The US consumer makes up 70% of the US's GDP. So very important metric for the US, how the US consumer is doing. And remember, the US makes up about a quarter of the world's GDP. So between China's retail sales data and US's retail sales data, that is making up around, retail sales for about 40% of the world's GDP. So that's both coming on the same day. Now, there are some expectations that this is going to be a better figure. You can see that the expectations are either 1.5 to 9%. Obviously, the previous reading is fantastic, 17.7%. So I wouldn't be surprised, and this is just speculation on my part, if we do get a higher retail sales number out later on in the session. And that could in itself change the risk tone to positive. So that was part of the reason why I was cautious on my Aussie US dollar shorts. Wasn't looking to hold this for a long time, even though the risk tone is currently off. You haven't got to be trading very long recently to have been seeing this constantly risk off, risk on, risk off, risk on. And there's a bias towards risk on continually. We now got double doses of good virus news. And I think we're due a COVID-19 update on the vaccine out of Oxford group at some point today. So, that will be not unexpected, not new, but just worth bearing in mind. It wouldn't take much, is what I'm saying, for the markets to flip and focus back onto risk on. So this US data points will likely prove the catalyst later. So let's just take in order the main events that we have. First of all, we have the ECB interest rate decision. No change is expected in the ECB interest rate decision. And in fact, the decision as a whole is expected to be a pausing, a breather kind of meeting. It's not hard to see why, because there's so much uncertainties in the market. It was the last meeting, the ECB in June. They basically expanded the PEP, the Pandemic Emergency Purchase Program, from 600 billion euros. They expanded it by 600 billion euros from an expected 500 billion euros, and they made the whole package a 1.35 trillion euro package. So there is a sense now in which it's just waiting to see how things develop. Eurozone as a whole has been showing signs of recovery. We have been seeing at least some bottoming kind of data out in the last month. So there's nothing to unduly concern the ECB, and you would anticipate a fairly, standard on-hold response, particularly because we had the Euro Summit meeting on Friday and Saturday, and it's likely to remain greater focus of what's happening with the European Recovery Fund. That is still to remain the focus, that 750 billion euro European Recovery Fund. Will that be accepted over the weekend? That's likely to be the biggest driver of the euro. However, can I just recommend that you do read a couple of things ahead of the ECB meeting. First of all, have a look at the Tradable Sentiment Shifts article that we've put up. This does go through in some detail what's expected. Also, do look at the Daily Risk Event Outlook. And there is a particularly helpful ECB rate decision crib sheet from ING. So this is particularly helpful, and you can just flick that up and you can see, what is going to be, what is going to be the likely result of, expansion or contraction of the PEP program. Just one thing to be aware of is, as Arno was pointing out earlier in his video on the Euro-US dollar, is that there is a sense in which if the ECB don't use the full envelope, so if there is an earlier end to PEP, they don't have to use everything that they wanted to use, that could end up being euro positive as well. So some analysts are saying that would actually be a euro positive reading, because the idea is recovery going well, that's positive for the euro, rather than just less stimulus equals euro weakness. So in other words, just be slightly cautious if we suddenly see an earlier end to PEP. Just check out what the market reaction is, because different analysts have got a slightly different take on what that would mean. So just a little bit of caution in terms of the initial reaction, and just looking to see what the sustained reaction is if there is a major change to the PEP program. However, unlikely to be. It's unlikely to be, and the expectations are it's just kind of it's a take a breath meeting, waiting to see what happens. Okay, now we go back to the other key US data that we have coming out: initial jobless claims and continuous jobless claims. The initial jobless claims should be a non-event as long as it continues to go around expectations. If we see that rising, that will be a concern to the market, although it's not expected because people are not initially expected to be marking themselves as jobless, obviously at the moment, because of the fact that we're through the initial shock of the COVID-19, and a lot of people who have been made jobless are. There's not many initial new claims. So if that does go up, that would be a shock to the market. As it is, no change is expected. The continuous jobless claims, 17.6 million expected. This is a more important metric, and it gives a better indication of how the US job market is going. And this is literally, it's telling you how many people are still out of work. What's the continuous cumulative total? Okay, so if this does hit above, 17.8, anything 18 million and above, that again could harm risk sentiment and turn risk off. If it flips below the 16.3 million, that's potentially positive for the market. The only thing you've got to remember is we've got retail sales being released at the same time. So this is a scenario where you've got to take, you've got to take the data points in together. The best tradable opportunity is when they all agree. So if we have a scenario where we have jobless claims lower, continuous jobless claims lower beneath that 16.3 million, and then retail sales month on month higher, anything above 9%, that would be the most bullish kind of picture. The most bearish picture would be initial claims above 1.35 million, continuous jobless claims above 17.8 million, and retail sales below 1.5%. So that would be the most bearish outlook, and that would, lend itself to Aussie US dollar weakness. And as I pointed out, we've got that, that head and shoulders pattern and that big 0.700 level. So any return back up to there on poor US data will be considered excellent for shorts. And of course, you've got this pattern here. So what that could mean is that if the price goes back into this pattern and breaks down, you've got some really obvious, nice places to trail your stops by. The other side of the pattern, just inside the pattern, and then you could follow it potentially down. So that's in the scenario where it's worse than expected. If it's much better than expected, then obviously you've got the same on the upside. If we suddenly see markets going risk on, then we've got a nice, easy place to define risk just below this trend line, just somewhere in the middle of the pattern, and then you're playing above to the high. And technically within a triangle pattern like this, as we said yesterday, you essentially the potential for the move is the actual height of the pattern. So it'd be here from 7050-ish down to 6781. So you could look at an extension of that to the upside potentially. An obvious target that, if I was in this, I'd be looking at somewhere that's 7150 up at that recent high there, just as you have to take out these recent highs. So that's a bullish and bearish potentially outlook depending on what we get. If we get a mix in between, obviously we'll have to take it as we find it, and we will update you on the terminal as to what's going on. I think that's the main issues that I'm going through. I'm just going to check that I haven't missed anything off. Yes, one last thing. The press conference. Don't forget that with the ECB rate meeting, there's also a press conference at 13:30 UK time, and it's always important to get the decision and the press conferences, because the press conferences have the ability to, clarify what's been said earlier in the meeting. We also have some Brexit talks going on as well in the background. So don't forget those Brexit talks are going on. And we got some Bank of England speakers as well. So don't forget that could potentially move markets. That's the key issues that we have coming up for the session later. I'm now going to go through to the question and answer sessions and see how we're going. Oh, yeah. Hi, Ariel. New member here. How do I turn on pivot lines on TradingView? Well, Ariel, first of all, welcome. Good to have you on board. Pivot points are dead easy to turn them on TradingView. I'll just quickly run through how you do that. You simply go to indicators and you want classic pivot points. So you're using the classic pivot points and you want to set them up like this. So if you want to take a screenshot, Ariel, you just have pivots time frame as the daily, go pivots back 2, and then you can add the pivot lines as you want. Now, as you can see, you see how the way the chart resizes when you put extra pivot lines in. So we don't put all the pivot lines in because it makes the chart look a little bit more clumsy. So that's what you're doing. Pivot points, classic, use pivot point daily. If you use auto, it will just adjust the pivot point for the time frame you're using. If you use daily, then whichever chart you're on, you'll just have the daily pivot points marked on, which is very handy. Yeah, you're welcome, Ariel. No problem. Yeah, morning, Jimmy. Just wondering from a wider economy perspective within the UK, where do you see some potential growth? As I see, it's likely we move away from the large consumption-driven economy, and that does make me fear a lot for jobs. It would be good to be on the right side of things going forward. Any thoughts? Jimmy, I have similar concerns for you as you. I'm quite fearful for jobs in the UK, and it's like many things with this COVID-19, you think a lot of patterns are going to maybe potentially permanently change. This sort of move to digitalization has been kind of accelerated. So I know a number of companies are thinking, you know, do we need so much office space in the future with so many people able to work from home? And a number of companies have found that people can work from home just fine, which makes sense. So Jimmy, what exactly is going to happen in the UK in the future and globally is very, very uncertain. And I certainly don't have a crystal ball, Jimmy, so I can't see in the future. But I do share your concerns. And also the debt levels are going up across the world. UK's debt to GDP ratio is now above 100. So I did see an article on, a friend sent me an article on Bloomberg yesterday about the UK potentially needing to use World War Protocol. Hang on a minute. Sorry, I'm just gonna find that link. Sorry about that. There we go. I just want to find that link and send it to you. So it's on my WhatsApp, so that's why it's. I'm just going to show you that link. That's it. Right, I'm sending it to you, Jimmy, and I'm going to send it on the chat to all panelists and attendees. There's an article here it was from Bloomberg, and it was on how the UK is going to pay off its debt. I hope you find that interesting and helpful, Jimmy. But it's a big issue, and it's one that it's going to be a wait and see how things are going. And we kind of saw that today with the jobs data out of the UK. So you can see that on the face of it, that looks excellent unemployment data. You know, claimant counts down, unemployment rate down, you know, average weekly earnings, okay, not much of a difference. Average earnings up. You know, that's really fantastic jobs data. The problem is, of course, Jimmy, is that the furlough scheme is in place. So what's the true level of unemployment? Just don't know. So we're going to having to see what goes on. Yeah, sorry I can't be more helpful than that, Jimmy, but I haven't got a crystal ball on that one. From Zil, how can one benefit from the audio squawk and avoid getting into losing trades on actions from it? Right. Now, when you first use the audio squawk, at least this was my experience, when I first used the audio squawk, and for those of you who are new, I know at least Ariel is new, the audio squawk is just accessed here on the terminal, just flick open and the squawk is on. Now, when I first started using it from Zil, obviously I was entering trades willy-nilly, as it were, very quickly on the audio squawk, because you'd hear a comment that says something like, you know, some positive comment, and you'd think, well, that's a buy, and some negative comment, oh, that's a sell. The key to using the audio squawk is a couple of things. First of all, it's understanding that not all comments are equally important. So, for instance, if President Trump suddenly said, I'm going to put extra tariffs on China starting, you know, next week, you know that's going to be clear risk off trade, and it's a quick Australian dollar, Japanese yen sell. Okay, that'd be a great example of using the squawk. If someone said, and you know, sources say that the US may be putting tariffs on China next week, that's less important, because which sources? Who said that? Was it was it someone's next door neighbor's cat said? Always look on the squawk. Who is the source? The more authority the source has, the better. So, for example, in Brexit negotiations, if you get Michel Barnier or Boris Johnson or David Frost saying something about Brexit, then that has high importance. If it's someone like a junior MP says, a German member of parliament or a French junior minister says, then it has less importance. So one of the key issues of avoiding getting into losing trades from the audio squawk is noticing who said it, and also what are the market expectations. So, for example, if we have Angela Merkel, if it suddenly comes up on the squawk, says Angela Merkel says, I can confirm the European Recovery Fund will not be agreed this weekend because Finland and Austria are fundamentally opposed to it, then that would be a quick sell, the euro. Sell the euro Swiss franc, it would be easy. Because we know the expectations are really, you know, pretty much that the deal will get done. Certainly that's what we've been seeing in the euro. That's the reason we've been seeing for all the euro strength over the last, you know, few days. Euro strength, that the deal's going to get done. So that's a key, another key point. From Zil, I hope some of that helps. Don't worry if you have been just getting into losing trades. It's just part of the learning curve. I did it when I first started using the squawk. You know, it's just a learning curve. Yeah, thank you, Fimzil. Good day to you too. Venkat, I don't know if I'm looking correctly at the Aussie US dollar top downward trend. If you move the trend line a bit upward, joining the two tops, the Aussie US dollar seems to be below the trend line now. Maybe I'm seeing it wrong, Joel. Sorry, everyone. Hey, Venkat, no problem. We can. Okay, so just looking at the daily chart. So, yeah, so you're right, Venkat. It's just holding above the tops of those prices. You can see you are right that we're just back into that level now. Now, we're there or thereabouts. Price can easily pop back over, but you're right, that is back into that trend line now. So yeah, good spot, Venkat. Gold star for you. Well done. Rolando, yeah, generally speaking, how many ways to understand or interpret the market are there? Apart of most obvious reasons, like risk, on, off, is there any way to understand fundamentals differently? If you're an experienced trader, for example, is there a way to get to the conclusion that the virus is going to be good for equities or something like this? Hope I explain myself in this question. Thanks. Let me just have a look. I'm just going to read that again, Rolando. Is there any way to understand your experience trading? Is there any way to get to the conclusion that the virus is going to be good for equities? I'm not sure if I've understood your question fully, Rolando. I think I may have understood elements of it. I mean, the main way to understand the market is there's two ways to understand the market, and I believe that every trader should embrace both. And that is seeing the market both technically and fundamentally. That's what I think you need. You need to understand market technicals, and you need to understand market fundamentals. Now, I know some people are saying, you know, all you need is the market fundamentals. And some people say, well, all you need is the market technicals. I actually think you need both to kind of, you know, successfully navigate your way through the markets. So I see what you mean, yeah, like risk on, risk off. Now, risk on, risk off is just part of understanding market fundamentals. So the market isn't always risk on or always risk off. Sometimes there are grayer points, and sometimes, you know, with different markets, there's going to be different drivers, fundamental drivers, like, you know, sometimes you've been seeing the oil market has been operating independently of the risk on, risk off due to supply and demand issues within oil market. And of course, with all markets, there's different drivers for it. So, you know, sugar, soy, you know, sugar, coffee, different types of commodities have different drivers to them. So it's not all risk on, risk off. But if you come to a conclusion, for instance, if you came to the conclusion that the virus is going to be good for equities, then you might have, you know, sat back and thought, actually, you know, this is going to be good for Netflix because everyone's going to be at home, you know, and they're going to have something to do. So I think Netflix shares make sense to buy. The, you know, the stay-at-home stocks, or hang on, everyone's going to be using Amazon a lot, or on Facebook they'll do Facebook advertising for ads. So I like the FANG stocks. So I hope some of that helps, Rand. I think you're just exploring it, really. I think you're exploring the ideas, and there's a lot of different ideas out there, and the fundamentals and technicals kind of cover most aspects of trading. I hope some of that was helpful, Rolando. Hi, Paulson. Which currency pair to select depending on fundamental news? Yeah, okay, so Paulson, so I don't know if you're new here, but each day you go to the must-read section, and the must-read section, you want to always look at what to know before we start the trading session. You hit on that. You also look at the dominant currency sentiment. That tells you the bias that we have for the day, okay? And it tells you the reasons for that bias. So you can see today, the bias was Aussie US dollar selling. And then if you go to the terminal, the first video of the day is usually the currency pair that we have a bias for, okay? So we look at, you know, what we like to pick one currency pair, okay? You know, or one main theme for the day, just to make it simple. Right, where are we? Yeah, so what to know before we start the trading session. And there we had our first video today, Aussie US dollar downside bias, but key US data ahead. Okay, so that was just today, Paulson. We were flagging up the Aussie US dollar downside, but just explain there's key US data ahead. So it's likely to be volatile and chip choppy until we get there. Oh, good, Paulson. I'm glad that's helped. Oh, Fumzu, what about squawks that are technical in nature, like indications on Brent and WTI selling? Well, that's so say you get, you know, you suddenly get some news on the squawk saying, you know, US crude futures have just dropped, you know, 60 cents in the last 5 minutes. Then you don't just want to join that as a sell, but you want to look at the reasons for it. So if you do get a technical nature on the squawk, then look at the reasons for the move. If there's no reason for the move, it could be a great opportunity to buy. You know, if all of a sudden the Aussie US dollar now, you know, suddenly shoots higher, you know, 100 points for no reason, then you can know, oh, that's a great opportunity to potentially sell that. So yeah, you can use squawks that are technical in nature, but what the way to avoid the mistake from Zil is don't think, oh, the pound's, you know, the pound shot up 40 points. The pound's just taken out, you know, the key overhead level. Don't just then, oh, okay, I'm going to buy the pound. Don't use the squawk like that. You want to look at the reasons for the move in price. Hi, Ashan. What's the easiest way, of course, to stay updated about latest Brexit and other news? Okay, the easiest way, use our terminal. So go to Market Insights. Have a look at pound current sentiment drivers. It will tell you the latest drivers on what's going on with Brexit. And the other tool you could do is go to our all sentiment stream. Just use the search tab and just type in Brexit. Then type in Brexit for the last month, and you will get the latest Brexit news here as a search. So you can just use this here and look at the date and see the latest Brexit news headlines. Europe minister says Brexit negotiation failed to make enough progress. Got different news headlines. So that's the best way to stay on board. And that's what I do, Ashan, if I want to think, oh, hang on, you know, what's going on the latest Brexit negotiations, or what's going on the latest oil moves, I'll just use the search, tool here in the terminal. It's great. It's one of the sources that I use just to stay up to date. Oh, Ravinder. Yeah, somewhat unclear in the Aussie US dollar discussion today. Yes. If the US data is a beat in all areas today afternoon, US dollar is expected to weaken, indication risk on. Yes. So yes, that's right. So if we get a strong beat in the data, then we would anticipate US dollar weakness, Australian dollar strength. So that could be a nice Aussie US dollar upside. Anthony, yeah, any advice on 1, not cutting winning takes short when you have a major win, 2, letting a clear losing trade run and not exiting with a smaller loss? These are 2 of my biggest mistakes in trading. Thanks, Anthony. Okay, yeah. Let's do with the second one first. So once the reason for the trade is no longer in place, close the trade out. So let's say, for example, that, you know, we were looking yesterday, weren't we, at the, here's an example. So we're looking yesterday, if the risk tone was on, we were looking at buying at that 0.700 handle. It was a good level for buying it, okay? So price moved into that 700 handle, and price immediately went against. Now, I can't remember exactly which time the risk tone changed, but say you were long from this 700 handle and you thought, you know, I really think the market's going to be going up today. I think that positive vaccine news is going to really boost sentiment today, which is legitimate. Someone might have thought that. And you thought, well, I've got my stop just in the middle of this pattern. I think it's quite safe down there. And say you came to the markets this morning and you saw that price was here, but you saw that the market was in a risk-off mood because of the poor Chinese retail sales data, and all the headlines were just risk off, risk off, risk off. Then you wouldn't wait for your stop to be hit, just close the trade and say, I'm wrong on that. So the first thing to do is, if you've got a losing trade, just exit with the loss, because, you know, or else the loss just gets bigger. So look, Anthony, at what basis you're exiting a trade on, and look that once you know the trade is wrong, you know, if you bought here expecting risk on markets, and then the market is clearly risk off, you know, that we saw a huge drop in Asian equity markets and European futures markets were down. It's just, you know, risk is off, yields are down, everything about it is saying risk off. In that scenario, then just close the trade out. 1, not cutting winning trades short when you have a major win. Don't get too greedy on taking your profits. So if you're, you know, if you've got a decent win, don't wait for a home run, just take your profits. So, you know, even if you've got sort of, if you're intraday trading and you've got somewhere between 40% and 50% of the daily range, then take that, that's okay. You know, take the win. And then the third bit of advice, Anthony, is just keep practicing. Just keep practicing and practicing and practicing. And then finally, if you're struggling still, just de-risk. Because what you might find is that you're too involved in the trade. So it might be the fact that the amount of money you're risking is impacting your ability to think clearly. So the other thing is just to totally, de-risk your trades and use a very, very small amount of risk. And then once you start getting things stable, using a lot less risk, then you can sort of scale up. Hi, Rolando. What I meant with my question is if there's a consistent way to win the market interpreting the news differently. I mean, every experienced trader will get to the same conclusion by reading the same sources. Generally speaking, I hope I explained my question better now. Thank you. Right, yeah, okay. I don't know if you're overthinking it too much there, Rolando. There's always, it takes two people to make a market. And you've got to remember as well, different people are trading on different time frames. So what's bad news for someone on Monday might result in a currency falling. But for someone who's looking to buy and hold over weeks and months, that Monday's bad news is a great opportunity to buy. So there's always two different people in the markets, and people are in the markets for lots of different reasons. So some people are speculating, like ourselves. Other people are in the market just because it's part of their day-to-day business. Maybe they're moving a currency, they're paying their staff in a different country, so they need to move pounds into dollars or move euros into the Australian dollar. So there's lots of different reasons for people using the market. Some people are just taking part in normal financial transactions. So I don't think there's particularly, aside from that, I wouldn't overthink it. Rolando, I hope that helps. Hi Richard, do you use the RSI to help select entry points? Sometimes I do use the RSI, Richard. It's a legitimate technical tool to use and can be used alongside fundamental analysis, no problem. Demandra, hi, sorry if this has been covered, has just logged in. Any thoughts on Euro, US dollar, and how today's ECB will cause a move, if any? Yeah. So, first of all, to say, Demandra, don't forget to go to our must-read section and do check out our daily risk event outlook. There is a really nice crib sheet for what's expected here out of the euro. Now, the bottom line, Demandra, is that there will be no change to the ECB rate decision. However, if there is a change, this is a good crib sheet for what we can expect. The only issue to be aware of is that if we get an earlier end to the PEP program, some analysts are saying that will result in Euro US dollar upside. So just to be aware that if the PEP program is ended earlier, that could be seen as a positive because like Eurozone's doing really well. And obviously with the US going more of a shutdown route, with California shutting down, that could potentially support the euro. So just in other words, if there is suddenly a earlier end to PEP, be aware that that could be bearish, it could be bullish. Different analysts are saying different things. Key things, if we do get more PEP increases, that's expected to be bullish for the euro. That again is the pandemic purchasing emergency program. If that is extended, then that's expected to boost the euro. Although with this meeting, it's like nothing much is expected, Demandra, because we've got the European Recovery Fund due to be talked about on the weekend, Friday and Saturday. So hope some of that helps. And also the other thing to look at is the tradable sentiment shifts. There's some more of an in-depth rundown there. So I hope that gives you access to some of those sources, Demandra. Ravinda, hello. Once again, Giles, what kind of general rule to observe in fixing a stop loss in terms of number of pips than entry point? Yesterday, I missed the US dollar CAD short as the stop loss got hit. I had 3 pips too less. Yeah, okay. So stop loss, basically, just put your stop loss, above a relevant swing point. So I was shorting Aussie US dollar this morning and I had so I shorted from around this level here, right? It was here, just under the 700 handle, that was it. And I just had my stop loss at the start of the session above this swing high here. It's just completely out of the way, Ravinder. Now, I had no intention of getting my stop loss hit, but it's there just in case, okay? So if price has started to meander back in and starts closing back into this head and shoulders pattern, then I will just exit the market because the market's not behaving how I expected. So I'd take, you know, maybe a 27 point hit, even though my initial stop loss was higher. So I would say, Ravinder, use a dynamic stop loss, anchor your stop above, you know, a recent swing high or low. Like, so here today, say, for instance, I suddenly wanted to go long on the Aussie US dollar, then I just put my stop here out of the way below that 6913 handle, because it's outside of the area. And you know, sometimes how you get a sudden spike in prices. If you just have your stop, so you had your stop loss here at 6952 and you were going long, your stop could easily get hit. Or maybe you just had it here underneath the S2 pivot point. You can see, look, you're still in price, so price could easily get hit. Just put it outside of price. And then if price moves, and then as price moves down, if it's moving down for a reason that negates your trade, then just close it out. So I think that can help. Yeah, it's frustrating when your stop loss gets hit and you know, you had the right direction. Yeah. Anthony, what currency would you pair the euro with on today's ECB decision? Euro US dollar. It's the most liquid currency pair. So I definitely use Euro US dollar today. Yeah, okay. Yeah, no, you're welcome, Ravinder. It's frustrating when your stop gets hit just by a few points. So you kind of got two levels when you're using your stop. Well, I have, Ravinder, I've got the level where I'm just putting things out of the way, and also the level where I'm really going to be reconsidering the trade. So I very rarely get my stops hit because I'm not trading like that. Good. Excellent. I'm just going to see if there's any other questions that we have. Yes, that's great. Ravinder, does it mean to watch it continuously? No, you don't have to watch it continuously. But it means that you've got a continuous awareness. So if I was, you know, when I'm shorting the Aussie US dollar this morning, I wasn't watching it continuously, but I was aware of it continuously. Your emergency stop is just there in case of an emergency. So, you know, this morning I was having my breakfast. I wasn't just sat here watching the Aussie US dollar. I wasn't even giving it a second thought. But, you know, when I came back after my breakfast, you can see, okay, you know, you're reevaluating. So, yeah, you'd left the trade alone. Yeah, whenever you leave the trade alone, there's always the risk something's going to come out on the news. There's going to be some announcement. So, you know, that's a risk you've always got to be aware of. Okay. Yeah, okay, that's super. Okay, folks. Well, thank you very much for your time today. Good questions as everybody, as usual. Particularly welcome to new folks. It's been good to have you on board, and don't forget you can ask questions, and if there's anything you're unclear of, please do reach out during this webinar. And thanks to the regular guys as per usual. Thanks for all your input, and I will hope you have a good trading session coming up for the ECB rate meeting. So we'll have to see what they say, and we will be back with you on the webinars, due to be back with you next week on Monday. So I wish you all a very good weekend as well. Thank you, everybody, and goodbye.